Hi there, Internet. My name is ᴄᴏᴜᴛ, and I am one of the most copied traders on eToro's platform. That means that I manage one of the largest sums on eToro, upwards of $30 million in AUM. All right, so today I wanted to talk about a concern, a question that I'm getting quite often at the moment. People are really worried about us being in a bubble and what might happen next and how best they prepare for that. And I think there are a lot of misconceptions, a lot of bad ways, bad habits that people have formed. And so I wanted to talk a little bit about, what bubbles are, what happens in bear markets, and how we might deal with them. All right, let's get into it. So the reason that people think we're in a bubble and corrections are coming is that everything is hitting an all-time high, basically. If you'd invested in just about anything over the past 6 months, maybe a year, you would have done very, very well. And so all the major media outlets are publishing information about how all the different asset classes are hitting all-time highs, or, in the case of oil and other commodities, about to enter super cycles that will send them to all-time highs. And so I don't think we're necessarily at the euphoria stage just yet, but people are very optimistic. And in some senses, that optimism is deserved. I personally don't think we're in a bubble, but we have had a very, very long bull rally without a decent consolidation or correction. And as that goes on, it becomes more likely that we will. And so experienced traders have been talking about this, and I think that the people that are coming up, they're becoming more experienced as investors and traders. They know that there's something in this concern. And whilst it might be scary to go through a bear market, which is the consequence of a bubble popping or just a correction, there actually isn't that much to worry about, and this is why. So if we look at a history of bull and bear markets across the S&P 500, which is basically the benchmark for the US markets, the picture in the middle of the screen very obviously shows you that the bull markets are much bigger than the bear markets. They not only run for longer, they reach higher levels, and so there's a little table summarizing that for you. And so for those people that try to anticipate the bull market, the turnaround, the consolidation, the correction, and plan for it, just know that if you did nothing, you're probably going to do pretty well. and in investing and trading, it's quite hard to do nothing. It's very boring to do nothing. But, you might actually end up with a fairly decent return. And just a few of the stats that I picked up about bear markets. I mean, there are lots of these that you can pull out of the internet, but there've been some fairly big ones. They've run for over 2 years. Well, the 1B is nearly 2 years. The drawdowns were difficult, right? So if you were sitting on a 59% loss, it would be difficult to do nothing. But for those that are thinking, because we've reached an all-time high and we've been setting new all-time highs for months now, you should know that since 1950, there was a 99% chance that the S&P 500 would hit another record high within 12 months. That's a fantastic statistic. So just try to bear that in mind when you are becoming quite worried. So for the past 7 decades, right, so the same amount of time, the S&P 500 has taken about 2 years to recover from the big drops, those bear markets. There have been 38 corrections, and a correction is smaller than a bear market, so between 10 and 20%. So there have been more of them, and 2/3 of these have found their bottom within, let's say, roughly a quarter of a year. And there are a lot more bullish years than bearish years. Now, the most important thing to note is that every single crash, no matter the size, has been erased by some subsequent bull market. Not only has the market recovered, it has taken out the previous all-time high that preceded that correction or bear market and just continued going. And the reason for this is that our society, the population of humans globally, we develop technology and we become more efficient at getting things done. Our tools become better, and so our output increases per capita, per person. And as long as that keeps on happening, and it doesn't look like it's going to stop anytime soon, the amount of the wealth of our society will continue to increase. So, if an asteroid destroys the Earth, then, maybe this won't continue, but, we'll all be flying dead through space. So whatevs. All right. So the point I'm trying to make here is that being afraid of the bear market is unnecessary, and it's easier said than done. I understand that. And when you're in the throes of a bear market or a correction, it can feel very difficult, especially if you have a large amount of money or you have all of your money in the stock market. But history has shown that trying to play a bear market often loses you more money than doing nothing at all. So as an example, you might say, it feels like the rally's gone on for too long. I'm going to sell everything and I'm just going to sit on cash. And like in point 2 here, the S&P 500 could carry on going up for another year. And you would have lost all of the gains that you might have made because you were trying to prepare for a bear market. And all the time it was going up, you would be wondering, should I get back in, or is now the time it's gonna all come crumbling down? So that's the first point. You might not go to cash, you might hedge in other ways, but those hedges will always cost you something. On the other hand, let's say you did sell everything and you timed it perfectly, which is, it happens, but it's nearly impossible. So you sold everything and the bear market has arrived and the stock market is tanking. When do you buy again? You can see that a lot of these big bear markets, they lasted for years. And on their dribble downwards, that maybe there were some sharp fall-offs, but there would have been some dribbling, a few months where the market's lost 1 or 2%. It can feel like you found the bottom of the market, and you might try back in, and then it drops another 10% or 20%. And then when it does really reach the bottom, your fingers have been burnt, and so you don't buy in, and you wait for the recovery, and then the recovery happens, and you've lost 20% of the gains that you could have made. It's important to note that the rally following the bottom of a bear market is usually strongest in those first few months. So if you're out of the market, you've lost a lot of the gain. And so you're probably getting the picture here. What I'm saying is that it is often better to just stick with it and do nothing else, so that you will lose some money on paper, but you will lose less money than if you tried to time getting out of the market before it crashed and getting back in before it rallies. I can almost guarantee you. An interesting example to note. So in front of us, this is the Amazon chart. It's a 1-month chart because I'm looking over a long period. So this was a real bubble. This was the dot-com bubble. Amazon share price did fantastically well. So it rose from $3-ish to $112, massive returns in a short amount of time. And then everything came crashing down, and Apple's stock price fell 95%. Now, if you'd been holding Apple from the top and you were looking at these losses, I think I probably would have sold, right? 95% is a lot of money to lose on a single stock. But if you had done nothing, so if you'd bought at that high and done nothing, you would have had your investment recover a long time, much later. The recovery after the dot-com bust was a very, very long one. And if you'd continued to hold, though, you would eventually have turned your, what was the point? So $100 and something buy-in to $3,200 odd. So the point is, I guess, hodl, to use a crude crypto term, but you can't do this for all stocks. A lot of companies died in the dot-com bust. Amazon was one of the more resilient champions, as we all know. Now, it's not just me saying that this is the way that you should work when the bear market arrives. I have experienced bear markets and many corrections, but I've also studied many of the great investors and economists of our time. I've also looked at evidence about how trying to buy the dip might affect you. And so this is a pretty good article. It's a very good article about how someone that is able to buy the dip perfectly versus someone that cost averages their investment, what the performance looks like. And you can see here that if you were prescient, you have a crystal ball, you have a deal with the devil, and it lets you know everything that's coming. If you were to buy those dips perfectly, you would only slightly outperform the person that was cost averaging their investment. And that's very, very interesting. Cost averaging is a lot less stressful than trying to buy the dip. And of course, you don't have a crystal ball, so you're not going to buy the dip perfectly. So you're not going to beat the person that cost averages. All right. So I'm hoping that this has helped people be a little bit less terrified of corrections and bear markets and bubbles when they pop. I do not think we're in a bubble, but I do think that there's probably a good consolidation due somewhere during this year. The thing to note is that if you are inexperienced or scared of trading the market, you might decide to cost average or just sit it out when the bear market arrives. But there are a lot of people on eToro that are fantastically talented, that have been through this before, and they will hedge and they will trade any downturns. And this will mean that they can beat the market on the way down as well as on the way up. So if you're interested in advanced strategies and people that know how to do this kind of thing, I encourage you maybe not to copy these people if you weren't too sure, but to reach out to them and to ask them a little bit more about how they do things. All right, that's it for today. I hope you found this interesting. I hope you are less worried about the future. It's going to be fine. And I'll speak to you soon. Cheers. Bye.